Hey everyone, welcome back to my channel. Here we will be discussing about the rollover relief. In previous video we discussed about rollover relief. So now the concept of both of these relief is same, that we have to reinvest the proceed of qualifying asset into the other qualifying asset within a qualifying period of time, but there are few difference which I will be highlighting in this video so that it will be easy for you guys to remember the rules. So let's have a brief of what we discussed in the rollover. In rollover we discussed that the proceed should be reinvested into the other qualifying asset, and qualifying asset means that land and building, fixed plant and machinery, and goodwill. But in case of the holdover, the asset is same, but there will be no goodwill. First point, and but these two assets should have a life less than 60 years. So now this is called as a depreciating asset. That means when you are receiving the proceeds from disposal of qualifying asset and you are reinvesting those proceeds into the depreciating asset, and depreciating asset is same as the qualifying, that is land and building and plant and machinery, but this time their life is less than 60 years, right? So in that case the holdover, there will be no rollover relief, instead holdover relief will be available. So now what will happen? The things will that in rollover relief, the gain which we are arising in disposal of qualifying asset was deferred against the base cost of the other qualifying asset we purchased, right? But here the gain will be not be deferred, instead the gain will be freeze, and freeze till earlier of the following three events. The first event is that disposal of asset, other event is that the asset ceased to use in the business, and third is 10th anniversary. Okay, so gain will be freeze, not deferred, till the earliest of these three events. Here we what was happening, that suppose we buy a asset of 500,000 new asset, and the gain which we arise on the disposal was 60,000. So if full amount was reinvested, then the full this gain was deducted from the cost of the new asset, and the base cost was 440,000, right? I'm just taking the example, this was the gain which we arise. So if full amount was reinvested, in that case the full gain will be deferred, and we need to revise the base cost. And if the partial amount is reinvested, as we discussed above, it the gain chargeable will be the lower of cash in hand and the total gain. Okay, so but in case of the holdover, we are not just revising the base cost. Simply what we are doing, we are simply freezing the gain till the earlier of the following three events. Okay, so their qualifying asset will be leased, whole land and building, fixed plant and machinery having life 60 years. Okay, so qualifying period is the same, 3 years of disposal and 1 year before disposal, but the claiming date is different, and that is 4 years from the end of the tax year in which the disposal occurred. Suppose disposal occurred in tax year 23-24, so now date will be 5 April 2028, which is 4 years at the end of the tax year. So now please note that this relief will be not available in case of the movable plant and machinery, because they are entitled for the capital allowance and which are allowable expense against the trading P&L. So please be sure about this. So I hope this is clear. In case of any doubt, do let me know over Telegram, Instagram, Facebook, Snapchat. Sorry, my fault. I mean to say Twitter, wherever you feel easy. Okay, so thank you so much. Stay tuned for more video.